Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's get straight to the top story this evening. On the 85th birth anniversary of Dhirubhai Ambani's birthday, both the Ambani brothers have agreed to a handshake. Reliance Communications has agreed to sell most of its wireless business to Reliance Jio. The deal will add much-needed impetus to Anil Ambani's debt reduction drive. So, what exactly does Jio gain? Mukesh Ambani gets access to highly valued 4G spectrum to the tune of 122 MHz. This will be across 4 different spectrum bands where 4G is available. And that's the most attractive part of Reliance Communications spectrum portfolio. That's not all. Jio also gets access to 43,000 telecom towers and the fiber optic cable network of nearly 1.8 lakh kilometers. That's not all. The deal is contingent on regulatory approvals and is expected to be sealed in the next 3 months. The MCN network is also a part of the deal. Standard disclaimer here, Reliance Industries, which is the promoter of Reliance Jio, also controls Network 18, which owns CNBC TV18, the channel that you're watching. Now, before we go any further, here are some reactions to this mega telecom deal and what this really means for Reliance Jio and the pecking order hereon from the best industry experts.
So very clearly, in line with what the consolidation scenario of the industry has been heading towards, again, RCom has significant assets, and it's a good thing that it was bid out in a very transparent manner. And I think the bidding shows that, one, the remaining players are very keen and are now strategic in nature in terms of going forward. So I think the emerging landscape of the 3 dominant players, which is Jio, Airtel, Voda, Idea combined going forward, is going to be the landscape of the operator community going forward.
As far as pricing is concerned, it's a function of many things. Number one, of course, obviously rationality is somewhere there as one of the factors. But there is a question of the competitive pressures and the competitive strategies that different players are adopting, number one. Number two is the fact that pricing also depends on what exactly is the business model that you have. New incumbent always tends to be a little more aggressive because they have to actually grab market share.
Yep. Going forward, you're going to see many more acquisitions and deals like this. In today's case, it might not be an all-out share purchase. It might be buying spectrum, buying the tower business, buying other assets. But with the likes of what you saw with Idea and Vodafone,
Exactly.
I think you'll see a lot more consolidation happening in that sector.
All right, that is the top focus this evening. But the other big story tonight, SEBI has allowed all exchanges to offer stocks and commodities trading from October 2018. That's not all. The market regulator, in a slew of reforms, also announced earlier access norms for foreign investors and capped cross-holdings in rating agencies as well as mutual funds to safeguard investors. Yash Jain will join us in just a bit. But however, SEBI did decide to hold further discussions on its proposed norms mandating listing companies to make immediate disclosures about their loan defaults. Listen in to what Ajay Tyagi had to say, and then we'll bring in Yash.
There was a discussion on the subject. It was discussed at length. I must say that in August 2017, when we issued it, we issued at our own volition. I mean, no one really asked us to issue. So it's not something that we felt as a concept it is good. In terms of implementation issues, it was discussed at length, but it requires further discussion. So it has been deferred by the board.
SEBI chief there confirming that the debt default disclosure norms have been deferred, but yes, that was discussed in depth, not confirming if it will be revisited at a later date or not. Yash, let's talk about the debt default disclosure decision deferred, which again that is, but it was a heavy duty day today as far as the market regulator is concerned. Take us through the critical decisions that have been taken today.
Well, it was certainly a heavy-duty agenda with SEBI Chairman Ajay Tyagi tackled, and the biggest headline coming from today's SEBI board meeting has to be that market regulator SEBI has given its approval for universal exchanges. This was something which both equity exchange, be it BSE or NSE, had shown interest in. Now, essentially, with this approval for universal exchanges, both BSE and NSE will be allowed to start a commodity exchange under the same roof with the equity exchange, and of course, on the other side, both commodity exchanges, MCX and NCDEX, will be allowed to enter into equities. Now, this convergence towards universal exchanges can be done from October 2018. Also, market regulator SEBI announced some new regulations as far as the mutual fund space is concerned, where SEBI has very clearly barred mutual funds or asset management companies from holding a board seat as far as another mutual fund or asset management company is concerned. They've also said that one particular company cannot hold over 10% in more than one mutual fund or asset management company, and a direct implication of this particular regulation could be that companies like PNB, SBI, Bank of Baroda, LIC will have to pare down their stake and bring it down to 10% as far as UTI mutual fund is concerned. SEBI also gave some important regulations as far as the credit rating agency is concerned, where it has barred one credit rating agency from holding a board seat or any sort of board representation. As far as another credit rating agency is concerned, it has also capped the cross shareholding between two credit rating agencies at 10%, and has also raised the minimum net worth required for credit rating agencies to 25 crore from the current amount of 5 crore. SEBI has also approved the listing of asset reconstruction company or ARC receipts, though we need more clarity as far as which are the market segments which would be allowed to trade in this new instrument of asset reconstruction company receipts.
There are technical issues here involved because the default can happen for so many. Then under RBI's regulatory dispensation, 90 days is allowed. If allowed after 1 day, there could be chaotic situation. So everybody, disclosure is good, but then sometimes the disclosure without knowing the context can create systemic issues.
It's a positive move. This is something that I've said was expected. And I think NSE would certainly be ready to get into commodities once permitted. At the end of the day, you want any exchange platform to permit to trade all asset classes. It just gives members flexibility, and it certainly consolidates liquidity to the extent that that is actually the outcome.
We fully are prepared, and we believe that this is the path that SEBI wanted all of us to take. This is part of what was started and has been discussed. So, A, it's not a surprise. B, we have been preparing for it. And more importantly, we have already also represented to SEBI what we believe will be need to be done before this deadline of actual sort of merging the two exchange streams. Basically, in terms of making sure that there's a level playing field between the overall commodities markets and between what the other securities markets are.
I think it's going to have probably more streamlining of shareholding pattern. And second is wherever there is a need for a consolidation within the asset management industry can potentially lead to the consolidation within the mutual fund industry. And there are only few players where the same shareholders have got multiple shareholdings in multiple asset management companies.
That would be UTI, right? UTI shareholders. Are you referring to UTI shareholders?
Exactly.
So this will speed up the listing of UTI, you think? Because these guys have to now, be obeying SEBI's rules. So SBI and the other banks, PNB, etc., will be forced to sell off their shares and list or something like that? Will that be the next step?
Yeah, probably either they may have to divest, or they go for a listing and through the divestment, or consolidate among themselves.
The intention is that SR should be more liquid. See, today what happens is ARCs will have to hold on their mandatory minimum, which is 1585 structure, 15% they have to hold.
Yes.
But the 85% which is remaining with the beneficiary bank, that is, as on date, is illiquid. But it will remain illiquid unless SEBI expands the definition of the QIB, who can trade and business SR.
Well, there's a slew of big stories, and here's another one. The government tabled a bill to replace the ordinance that amended the Insolvency and Bankruptcy Code in the Lok Sabha today. Remember, earlier this month, President Ramnath Kovind gave his assent to the ordinance, which makes it tougher for willful defaulters to bid for their companies during the insolvency process. There are, however, some changes in the tabled bill. Lata Venkatesh spoke to the head of SBI, Rajneesh Kumar, the MD of JSW Steel, Chichaguri Rao, and Rashesh Shah of Edelweiss to find out how they read the bill and the changes proposed by the government.
When we are looking at resolution, the credibility of the resolution plan and credibility of the promoters or the bidders. So that has to be a key consideration apart from the technicalities and legal.
Mr. Rao, did you see the new bill and the bankruptcy amendment bill as against the ordinance? Are there any material differences?
I have glanced through the just one page which has come by WhatsApp. I have not gone through carefully.
Okay.
But whatever I read, I am finding more of a clarificatory in nature than changing the spirit of the amendment which has been done earlier.
Okay. And one more question I had for you. There were people who raised the doubt that if even one of the group companies are an NPA, classified NPA, then that group may not be able to apply as a resolution applicant. Could you get any legal vetting on this, Mr. Rao?
No, it is a very generic statement saying that if any company becomes an NPA in any group, all the resolution applicants of that particular group get disqualified. So we have to see from the definitions that have been given in the IBC and also Companies Act and the SEBI. All these three together we have to test who is the resolution applicant, who are its promoters, who are the connected persons, and whether this disqualification is applicable for those entities coming under these definitions as given under various acts.
Okay.
So it is a very generic statement to say that any company becoming NPA in any group, then entire group get disqualified. I don't agree with that interpretation.
Okay. Rasesh, the same question to you. What have your legal eagles told you about the disqualifications for those who can apply as a resolution applicant? Will this NPA issue can it be put to rest already, or do you think it will pose a problem?
I think the way it has been drafted, it is still a grey area, and I'm expecting that a few NCLT pronouncements on this will clarify the air, because I think eventually there are group companies which are more integrated, there are group companies which are not very integrated. So I do believe that this will, and it has been deliberately kept a grey area because you cannot be too overly specific. So in the end, it is going to be case to case on who is allowed to be a resolution applicant and who is not as per the ordinance. I think the spirit is that somebody who has not has good credit standing, has not got good credit performance in the past, should not be eligible to bid, because you only want people who bid have got good credit standing in the past.
Yeah.
So I think that is the spirit. It will get tested. I don't think it is as clear cut as all of us are hoping for it to be.
Okay. Well, in that case, Rasesh, are you saying that the NCLT, the NCLT has respected the spirit of the IBC beautifully until now? Do you think that will continue and therefore all credible applicants will be allowed? Or do you think this is still something that has to be tested?
I think the spirit is all credible applicants should be allowed, and eventually it will also be a case of what are the other alternatives, because let us say if there is only one applicant and if the only other alternative is closing down of the company or the liquidation of the company, I do think that because the entire NCLT, the entire Insolvency Bankruptcy Code has been drafted keeping in mind revival and restructuring of the existing assets, not liquidation of the assets. Liquidation is the final option when everything else fails. So I think even that will play a role in terms of how the insolvency professional, the committee of creditors, and then the NCLT views the credibility of the applicants who come up with a resolution plan.
Okay, so that was what experts believe on the modifications that we have seen today. For now, we'll take a quick break. Coming up next, Lok Sabha passes a bill to criminalize instant triple talaq after a 7-hour-long debate. Bill now moves to the Rajya Sabha. Welcome back. You're watching What's Hot on CNBC TV18. Now, the other big story from Parliament. Lok Sabha has passed a bill to criminalize the practice of instant triple talaq among Muslims. The bill was passed after a 7-hour-long fiery debate. Opposition members tabled many amendments to bill, but they were all rejected. And in the end, the bill was passed through a voice vote. The bill proposes a 3-year jail term for the offender. Not just that, the offender will also be forced to provide compensation to the victim and her dependents. Lok Sabha saw an intense debate with the Congress party demanding that the bill be sent to a standing committee. The next stop is the Rajya Sabha, where the government does not enjoy a majority. So that could be a tricky debate.
सुप्रीम कोर्ट ने कहा 3 तलाक गलत है, तो क्या हमारी 3 तलाक की पीड़ित महिलाएं सुप्रीम कोर्ट के फैसले को मड़वा के अपने घर में टांग दें? क्या करें? सुप्रीम कोर्ट का फैसला हो गया, वहां मुस्लिम पर्सनल लॉ बोर्ड कहता है कि हम इसके लिए अपने समाज को ठीक करेंगे। ठीक होता नहीं है, तलाक बढ़ता चला जा रहा है। अगर इस देश की गरीब हमारी जो त्यक्ता मुस्लिम समाज की बेटी महिलाएं हैं, अगर उनके पक्ष में खड़ा होना अपराध है, तो हम 10-12 अपराध करेंगे। ये बहुत विनम्रता से कहना चाहते हैं। Every hour, three women are raped. Every hour, 5 women are assaulted with intent to outrage. 3 are kidnapped, abducted. That is why I say society has to be reformed. The minister has bought a bad law, and it cannot. And moreover, can the minister tell me, if a Muslim man says talaq, 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 Supreme Court says, your law says the marriage is not void, the marriage exists. What happens, sir, if I hire a lawyer like you and you stand up and say in court, no, he will use Section 84 IPC insanity? This is not a law to provide justice to Muslim women, but you are giving a handle to Muslim men to do more injustice.
And more Parliament action. External Affairs Minister Sushma Swaraj appraised both the Houses of Parliament on Kulbhushan Jadhav's meeting with his family. Jadhav has been in Pakistan's custody, facing charges of being an Indian spy. Sushma Swaraj slammed Pakistan for what she called an inhuman treatment towards the Jadhav family. Leaders of all other parties also backed Sushma Swaraj's statement and condemned Pakistan for the treatment meted out to Kulbhushan Jadhav's family.
पाकिस्तानी प्रेस को न केवल परिवार के समीप आने का मौका दिया गया, बल्कि उन्हें तरह तरह के अपशब्दों से संबोधित करके परेशान किया गया, ताने उलाहने दिए गए, उन पर झूठे आरोप लगाए गए और उनके सामने श्री जाधव को जबरन आरोपी सिद्ध करने का प्रयास किया गया। सुरक्षा के नाम पर परिवार के सदस्यों के कपड़े तक बदलवा दिए गए और पहनने के लिए अपनी ओर से वस्त्र दिए गए। श्री जाधव की मां जो केवल साड़ी पहनती हैं, उन्हें साड़ी के बजाय सलवार कुर्ता पहनने पर मजबूर किया गया।
And staying in Parliament, BJP MP Bhupendra Yadav has moved a privilege motion against Rahul Gandhi for mocking Finance Minister Arun Jaitley. Yesterday, Arun Jaitley made a statement in the Parliament clarifying the Prime Minister's statement on Manmohan Singh during the Gujarat campaign. Now, Jaitley said that the Prime Minister did not intend to alleged collusion between Manmohan Singh and Pakistani officials. In response, Rahul Gandhi tweeted mocking Jaitley's name and accusing the BJP of lying. The chairman of the House will now take notice of this matter and initiate necessary action. Well, let's move on to a story that we've been tracking very closely. Sources tell us that the centre is worried about the drop in GST collections. Data released earlier this week shows that GST collections dipped for the second month in November to 80,808 crore rupees. That is the lowest level since the new tax regime was put in place way back in July. The CBSE chief has written to tax officials in the backdrop of this fall. He has instructed officials to reach out to taxpayers on IT-related issues, provide a weekly feedback, ensure non-filers are brought into the field, and asked officials to look for a proper verification of transitional credit claims. Moving on, we learn from sources that Reliance Infra is likely to call off the listing of its road portfolio via an infrastructure investment trust or an InvIT. Reliance Infra is unsure about the retail investor demand for InvITs currently and is unhappy with the performance of India's only listed road InvIT by IRB. To put that in context, Reliance Infra had decided to raise 2,500 crore rupees via the mechanism in May 2017. This after receiving SEBI approval a few months prior. The company has confirmed to CNBC TV18 that it will consider any fundraising option that creates value for shareholders. And in a setback for IT giant TCS, a California judge has rejected its request to dismiss a lawsuit filed by an American employee in 2015. Further to this, the court has expanded the case into a class action lawsuit. TCS has given its statement to CNBC TV18 and intends to take this forward, is very confident that yes, this is something that they intend to fight and maintain their stance that they have been maintaining in court, indicating that the employee had not applied for any specific project and rejects any categorical discrimination. You can see the statement on your screen. A clear denial there. The discrimination hiring against people of non-South Asian origin is something that TCS very clearly rejects. Let's move on. With just 3 days to go before we bid goodbye to 2017, it's time for some crystal ball gazing. US President Donald Trump completes 2 years very soon. There could be some changes in his administration. Iman Javez looks at what we could expect from the Trump administration.
We could see a much different group of White House aides advising the president in 2018. Insiders are watching for any signs of departure from National Economic Council Director Gary Cohn, who publicly split with the president earlier this year. Also closely watched will be the president's top liaison to Capitol Hill, Mark Short, and keep an eye on the president's son-in-law, Jared Kushner, and daughter, Ivanka Trump. With investigations swirling and legislative progress slow, some believe the power couple may want to return to New York. Second, the special counsel's investigation will continue to haunt the Trump administration in 2018. Already, Robert Mueller has obtained guilty pleas and cooperation from former National Security Advisor Mike Flynn and Foreign Policy Advisor George Papadopoulos. No one outside the special counsel's office knows exactly where he is going next. How will it all end? 3 possibilities: more indictments, an impeachment referral to the House of Representatives, or a full exoneration of the president and his team. And third, the White House will try to capture legislative momentum after the tax debate. President Trump says one focus will be on welfare reform. He argues some unemployed people make more in welfare benefits than workers struggling with 2 jobs. That suggests he'd like to reduce benefits. But a senior administration official told me the plan will involve getting people back in the workforce and increase job training, suggesting an increase in certain benefits. Either way, the White House will try to get legislation through Congress early before midterm election year politics makes progress impossible.
Okay, we are not done with interesting global stories yet. Which themes will likely dominate in travel and hospitality? Here's Seema Modi with a CNBC playbook for the sector.
A growing economy and tax reform should bode well for the world of travel in 2018. First, for hotels, you could see a rise in occupancy rates as more Americans travel domestically in the coming year. But that also means competition will intensify as rivals, including Airbnb, try to attract more travelers. Second, for travelers, expect your hotel room to get a tech upgrade. Seamless check-ins, noise-canceling devices, and curated content are among the investments being considered by Hilton, Marriott, and other hotel operators looking to create connected rooms. But don't be surprised if that means room rates for these smart rooms go up. Third, cruise lines will look to China for opportunity. It is anticipated to be the world's largest cruise market by 2030, which means the race is on for Carnival, Royal Caribbean, and Norwegian to build ships that cater to this new wave of travelers.
And with that, we're out of time on this edition of Fotsal. Thank you so much for watching. Coming up next is our special broadcast, Rewind 2017, where we bring you highlights of the key events that shaped the Indian economy in the year gone by. Stay tuned for that.